Let's cross over now to business editor at Dallas Morning News and CBS News contributor Javier David. Good morning, Javier. So as we've just mentioned, the GDP report showed the economy shrank in Q1. But what's interesting is stocks actually made a comeback at the end of yesterday. So help us make sense of this new data from yesterday.
Yeah, look, in the immediate term, there's a lot of bad news that's associated with tariffs that's been priced in, and there's now some strong earnings that we got from Microsoft and Meta. Today we had Moderna and CVS beating expectations, Apple's on tap for later. So it's just given a really whipsaw, jittery market a temporary reprieve. So investors have this funny way of testing the upside when there's very little positive news and a lot of the bad news has been priced in. It's just kind of an excuse to look beyond the current moment. But the reality is the U.S. and China in particular are still locked in this stalemate, and even U.S. allies have yet to strike a bilateral trade deal. And that's just a negative, and there's no way to spin that. And we've got more data coming up tomorrow on jobs, so watch that one very carefully.
Yeah, and so if we take your point and look beyond the immediate, as far as the big picture goes, this GDP data is one step closer to a recession indicator. So help us understand why that is so.
Yeah, look, this GDP number, it was a weird report. We had a contraction, but it's backward looking, and it's just an empirical demonstration, really, about how government policy really can drive private sector decision making and microeconomic behavior. The good news is demand is firm. Consumers are still spending despite all of these anxieties that they have about the tariffs, and sentiment indicators that we've been getting recently have fallen through the floor. But, look, there's an old saying that goes, watch what consumers do as opposed to what they say in these surveys. And so what we saw was this sort of front running effect. Companies and consumers alike were sort of getting ahead of the tariffs by building their inventories now, and it created this contraction. But by one economist's estimate, the trade deficit, the trade dynamics shaved like nearly 5% off of first quarter GDP. And then there's the bad news. The economy is still very rife with inflationary pressures, and the jobs market is starting to freeze.
Which is a sobering detail, and we'll get more data before the week is out. Javier, thanks for joining us from Dallas. Appreciate that update.